They lied to you. Every single one of them, from your first teacher to your last boss, perpetuated the greatest financial deception in modern history. The idea that your time, your physical effort, your precious hours are the only true measure of your worth. It's a lie that keeps billions trapped in a never-ending cycle, endlessly trading the most finite resource they possess for a mere fraction of what they truly deserve. Today, you will uncover the precise mathematical trick that has doubled fortunes in less than 10 years for centuries, a secret mechanism quietly exploited by the truly wealthy. You will also learn 3 concrete, actionable pathways to build genuine passive income streams, transforming your money from a monthly expense into your most dedicated, tireless employee. Get ready to rethink everything you thought you knew about earning. For most of us, life begins on a linear track. You earn a salary, a fixed amount for your fixed hours. Maybe you get a raise, a slight bump, but it's still inherently limited by the clock. Think about it. A doctor, for all their specialized skill, can only see so many patients in a day. A lawyer can only bill so many hours. A software engineer writes code for 8 hours, then stops. This is the time for money trap. It's pervasive. It's socially acceptable. It's what everyone around you does. We're taught to work harder, not smarter. We're conditioned to believe that a bigger paycheck from the same old model is the ultimate goal. But what happens when you eventually want to slow down? What happens when your body can't keep up or your energy wanes? Are you still living that outdated script? Consider the data. The average American household income for a married couple with 2 earners hovers around $128,000 annually. That sounds comfortable, even substantial to many, right? Yet the median retirement savings for those nearing retirement, specifically individuals between the ages of 55 and 64, is a shockingly low $107,000. That's it. A lifetime of work for barely a year's income in savings. Think about that for a moment. This isn't just a number, it's a stark reflection of the time for money paradigm failing millions. Your 40 years of dedicated effort yields just a single lump sum that doesn't even last. This linear approach, where more time simply means more money, completely ignores the most powerful force in financial history. Are you ready for the actual wealth secret? It's not about how much you earn. It's about how much your money earns. This is where the truly explosive growth happens, the kind of growth that rewrites your future, not just tweaks your present. Albert Einstein himself allegedly called it the 8th wonder of the world, compound interest. Most people have heard the term, but few truly grasp its raw power, its brutal efficiency. This is where your money stops being a passive asset and becomes your most tireless, most effective worker. Imagine this. You take $10,000, not a massive sum for many, but a significant start. Instead of letting it sit in a savings account earning a laughable 1%, you invest it wisely, aiming for an average annual return of 10%. This isn't some speculative gamble. This is the historical average return of the S&P 500 index over the long term. Now, here's where the magic, the true financial shock, unfolds. Using what's called the Rule of 72, you can roughly estimate how long it takes for your money to double. You simply divide 72 by your annual interest rate. So 72 divided by 10% equals 7.2 years. That's right, your $10,000 becomes $20,000 in just over 7 years. Now, hold that thought. It doesn't stop there. That new $20,000 also starts earning 10% annually, doubling again in another 7.2 years. So, after 14.4 years, your original $10,000 is now $40,000. And another 7.2 years later, at 21.6 years, you have $80,000. And then, at 28.8 years, you're looking at $160,000. $160,000 from an initial $10,000, all without you lifting a single finger after the initial investment. Compare this to the linear path. To save $150,000 by putting away $500 every single month, you would need to save for exactly 25 years. 25 years of actively taking $500 from your paycheck every month without fail. And that's without any growth at all. Compounding does that for you, often much faster and with a fraction of the initial effort. Here's the shocking reframe. Banks thrive on your ignorance of this. They take your deposits, paying you a paltry 0.5%. Then they lend that exact same money out at 5, 7, even 15% for mortgages, car loans, and credit cards. They are using your money for their compounding. Their entire business model is built on understanding that money works harder than people. They leverage your deposits, your hard-earned cash, to fuel their exponential growth, while you're left with scraps. This isn't a conspiracy, it's just how the game is played. And now you know how to play it too. It's time to stop letting banks exploit this knowledge and start putting it to work for your own benefit. Here are 3 precise, actionable steps you can take today to harness this incredible power and start building your passive income streams. First, automate your index fund investing. This is the simplest, most effective starting point for nearly everyone. You want exposure to the overall market, not the stress of picking individual winners and losers. Open an account with a reputable brokerage like Fidelity, Vanguard, or Charles Schwab. Then, invest in a low-cost S&P 500 index fund. Vanguard's VOO or iShares IVV are excellent choices, tracking the 500 largest U.S. companies. You can start with as little as $500 to open the account, and then automate a transfer of $200 every single month. This practice, known as dollar-cost averaging, smooths out market fluctuations and ensures you're consistently buying more shares over time. Historically, this strategy has delivered those 10% average annual returns, putting your money on that 7-year doubling track. It's set it and forget it, a truly passive engine of wealth. Second, cultivate a portfolio of dividend growth stocks or ETFs. Once you've established your foundational index fund, consider dedicating a portion of your capital to companies that consistently pay and increase their dividends year after year. Think about opening a separate account for this, or simply allocating funds within your existing brokerage. You can research companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble, household names with decades of dividend increases. Or, if you prefer diversification, invest in a dividend-focused exchange-traded fund like VYM or SCHD. These ETFs hold hundreds of dividend-paying companies for you. Start with $1,000 and aim to add $100 monthly. Crucially, set up your account to automatically reinvest these dividends. Every time a company pays you, that money buys more shares, which then generate even more dividends, creating a powerful snowball effect. You're not just earning income, your income is earning income. Expect an initial yield of 3 to 5%, which will grow over time, providing a true passive income stream that flows directly into your pockets. Third, explore real estate crowdfunding for small-scale passive income. Many people dream of real estate, but are daunted by the upfront costs, tenant issues, and maintenance headaches. Real estate crowdfunding platforms eliminate these barriers. Sites like Fundrise or CrowdStreet allow you to invest in a diversified portfolio of commercial or residential properties with relatively small amounts. You're effectively pooling your money with other investors to own a small share of large real estate projects. You can begin with as little as $500 on platforms like Fundrise. The method is simple. Choose a diversified portfolio that aligns with your goals and let the platform handle all the management. You receive passive income from rental yields and potential appreciation as the properties grow in value, often generating annually returns of 5 to 12% without ever having to answer a single late-night tenant call. It's a completely hands-off way to tap into one of the oldest wealth-building assets. You see, this isn't about working harder anymore. This is about understanding a profound shift. You are no longer just an employee trading hours for dollars. You are now an owner. You are a strategist. You are someone whose money works for them, whose capital is now actively engaged in generating more capital. The clock, that relentless master of your old financial life, now tells a different story. You understand that your time is finite, irreplaceable, but your money's capacity to grow, to compound, to produce new streams of income is exponential. The scarcity of time is overcome by the abundance of intelligent, deployed capital. You are not just earning, you are building. Now is the moment to move beyond simply watching and listening. Take these precise strategies, apply them to your own financial life, and begin the exponential journey. Stop waiting for a raise or a bonus or some external validation of your worth. Start building true financial momentum today. Your future wealth isn't a matter of luck or circumstance, it's a matter of leverage, a matter of making your money work harder than you ever could. And what you've learned today is just the beginning. There's a deeper, even more foundational truth about money, about the very nature of value, that fundamentally alters how you perceive every financial decision. It's coming, and it will challenge everything.